Yo, what is going on, everybody? So, let's talk AMC. We were down very slightly today, 9 cents. That comes out to 0.44%. But all in all, yes, we did see the teens. Now, not too bad overall. We're going to be breaking this down from a technical perspective. And then, of course, guys, a lot of other exciting things that are going on behind the scenes that we'll cover a bit later. So, make sure you stay tuned because, like I said, some interesting things going on behind the scenes. So, breaking it down from the 5-minute level here, what we did have was a dip in the morning, but we did kind of consolidate around this area right here at $19.64. Now, we broke back up into the 20s. It didn't last. We came back down, but we did respect this overall level right here. Now, a few things on the volume that I want to mention. Yes, we did have higher volume today, but all in all, it wasn't really the greatest volume. Now, what I mean from that is this push that we saw right here, and sorry about the messages coming in. I'll actually mute that for you folks because I know you don't want to hear it. Anyways, volume coming in here, we on this push from 1951, our low of the day, to pushing to our all-time our high for the day. It was on descending green volume, which is not all in all a healthy push. And that's why I was expecting a pushback, and that's exactly what we got. Now, the push in the second part of today was a bit better, but still all in all low volume. Now, end of day today, we did get some buying pressure coming in, and from this point, we'll call it like $20 to $20.56. There was overall an uptick in volume, but not as much as we were going to hope. Now, like I said in yesterday's video, what we're looking at right now is the spring or terminal shakeout, depending on how you want to look at this, inside of this micro time scale of the micro accumulation schematic. The way I like to see a spring play out is kind of like we saw, and I'll actually show you a perfect example of this, back in when we had that first dip to $20.80. So this is going back a little bit more. Oh, whoopsies. Sorry, I went back way too far. Yeah, right here. When we had that giant burst of volume coming in, and we had like 144 million on the day. And that was actually, this was like 100 million, and then we had that Friday push of 144. So that's really where you get that buying pressure coming in, and we really didn't get that today. So it's totally fine that we didn't get it, and that is why I am leaning towards downside to come towards Monday. Now, we have been respecting the overall trend of the market. Of course, as we saw, the SPY, the triple Qs, the IWM, all had pullbacks similar to what happened with AMC, where you dip in pre-market, you come back up, trade down the rest of the day, end of day, you climb up. It was literally the same thing that happened with the overall markets. But the reason why I'm expecting downside pressure come next week is because we didn't get that volume influx that I hoped. 48, 50 million, whatever we had today, it doesn't really matter. That's still looking back at things and putting it into perspective, not the volume that we hoped. So, what can we expect? Well, I'm not saying necessarily that we're going to go all the way down to $16, but we do have that gap fill over here, and I'll show you exactly what I've been looking at. It would be this area right here, and I'll kind of circle that for you folks. I'll even put a rectangle shape in there. So it would be from like here, so like $17 to, to $16. It's a very small gap fill, but I wouldn't be surprised if we do come down and touch that now. Now, looking at the RSI, yeah, we're incredibly oversold, and we've been in this oversold territory for over a month now. I mean, yeah, we came out briefly, but we couldn't even get past 50, came back down, and now we're at 28.36. So we do have a little bit of room to run down. Now, I don't want to completely take off the possibility of moving to the upside come Monday because, as we can see here, this support that we talked about yesterday at $20.41 or $20 and some odd cents, that is the tip of the iceberg and the top of our January 27th run. So the fact that we did come down into this territory and then close above it on the daily was incredibly bullish. That's a great thing. But the fact that the volume simply was not there, that's why I'm leaning towards the factor of we may see downside. Now, of course, guys, I never want to be bearish with AMC. I love my girl, Amy. But at the end of the day, I want to just show you guys what I'm seeing. And overall, we can see a recent downtrend in volume, and it hasn't been pretty since that day where we had, this was 144 million. Previously, we had that 107 million day, and it's kind of dried out. Now, I mean, in the middle of the week when we were having, this was 27, this was 36, this was 37, 49. I mean, all in all, that's very low volume as well. And today, even having 56, yeah, it's a little higher, but still, comparatively speaking to what we saw, it's not the greatest. And just to put this more into perspective here, I mean, low volume sucks, yeah, because the stock doesn't move on low volume. We know that. But if we look back at the January run, we can see like middle of May, we were at those levels. I mean, even one day, 15 million. Holy shit, that's low. But still, 38, 37, in this 30. And then you do have that spike of 294 million. That is really the spike that I'm waiting for, some giant volume spike to tell us, hey, listen, some things are going on behind the scenes, things are piping up, get freaking ready. But until we do have that massive spike in volume, I am a little bearish on the short-term outlook for AMC. And let me be clear, guys. My outlook for AMC, the overall picture of where we're going, does not change. Short-time timeframes, guys, it doesn't matter if we see $16 or if we see $24, $25. It doesn't matter. Absolutely not. So, all in all, just a short rant to tell you guys, I'm not leaving. I haven't sold a freaking share. I'm ride or die, guys. $0 or all-time highs in you know, thousands of dollars. That's where I'm at, personally speaking here. Now, let's do a quick, because we have been discussing this yckoff schematic playing out on the short term. And like I said, things are okay. Now, this chart does look like that accumulation schematic where you have your stoppage, you have your sell test in phase B here, push up to the top, you have your downtrend, and what we're in right now is phase C. So per yesterday's video, we were calling for some type of downside to come. Now, that's fine, guys. Downside is okay because per the accumulation and per yckoff, what they're really trying to do is A, trap short positions, and B, shake out the paper hands to accumulate shares. Now, why are they trapping shorts? Because when they do start to buy in all of these shares, you know, what's going to happen? Well, the price is going to go up. And when you do have this bearish kind of outlook of the overall technical analysis, which the yckoff accumulation schematic is more of just like a trickery, I guess you could say, to, like I said before, get those shorts trapped in position and also shake out the paper hands. But once you have that massive accumulation take place, a giant influx of volume to the upside, well, shorts are going to start covering their positions, which causes more price run up. And it's just a domino effect across the line because we know that there are a lot of shorts inside of these levels because of the kind of massive downside that we have seen. So all in all, yes, we're in phase C. Now, this could be the spring. Absolutely. I mean, we did get that kind of double touch point here on that 30-minute chart. It looks great. But with volume low, I do believe we are going to have a deeper spring. And this deeper spring is what I like to call, and many people call, the terminal shakeout, which is just a, like we read before, directly from the yckoff schematic PDF document, it's a spring on freaking steroids, guys. They're juiced up, they're accumulating shares, and it's about to go crazy after that terminal shakeout happens. So next week, we may have some more downside to that $16, $17 area. Do we have to necessarily come down all the way? No, we don't. Not at all. But what we need is that volume increase like we saw in the past. We need those buyers to step in and drive up the price, trap the shorts, and start to see some of those smaller firms cover those shorts. And then, yes, you get the picture. I hope now. So all in all, guys, it is what it is. Doesn't look great. 19 sucked to see today because we haven't seen that level since we kind of last ran up in June. But hey, we're here. It's okay because we know we already won the game. So enough with the charts, guys. A couple other things that I want to discuss. Actually, yeah, we're going to start off with unusual whales, go over the options flow. So kind of the way I like to trade is you do need to use this options data to your advantage. Unusual whales does a great job at just giving us a quick little outlook, has all the great filters, but it really paints a big picture in what the larger whales are doing right now. So what we saw and what we've been seeing with this bearish price action is a lot of puts being bought, specifically for the levels around $25 and $20. So that's why we saw some downside. It's okay. But the fact that we haven't really seen a lot of these puts start to sell their positions off means to me that, yes, they are expecting more downside and potentially expecting that gap to be filled at $16, $17. So that's, again, why we are going with the thesis of we do expect some downside come next week. Now, the thing is, like we said before, guys, the composite man or woman wants to trap the shorts. They expect it to go down to $16, $17, but like I said, it doesn't necessarily have to. We could see that volume step in come Monday, come Tuesday, come Wednesday, come whenever, and really trap those shorts. Now, it's not guaranteed, but of course, anything can happen in this market, and specifically with AMC. So, next thing I want to discuss, because we did briefly talk about the options expiration calendar, but shout out to my man, Pinoy Ape. This guy's always posting great information over here on Twitter. So, if you have a Twitter, definitely drop a follow. He posts some very valuable information. And he made a very great document that even the smoothest of brains can understand. So what do we have here? And we have discussed about this, so I'm not going to beat this with a dead horse and go into detail. But what you have is the expirations of your options on specific months. Those months are June, December, and January. Now, what happened in January? Well, we have the dates right here. That 15th date right there, that's when you do have that expiration, that final expiration of your ETFs, options, all that good stuff, the futures, everything. So that's really the start of what happened early on in January, where you have that jump up, and that's where you start to get some pressure by those shorts. Because guess what? It's like, shit, this was at $1.91. Next thing you know, it's at $3. When we're at price levels like that, that's a problem. So the smaller hedge funds, they're going to start covering some things. And then it goes a little bit more. And then, bam, we get that January 27th massive move. Now, again, what happened in May? Because this June run-up did happen kind of all the way through May. Well, May 21st was that rollover date. And that was really the start of boom, boom, freaking candle. Shout out Trey Tradesman. You pretty much coined that one right there. But nonetheless, that absolutely had some play and some power to that run-up right there. Now, what happens next? Well, December, we didn't get anything. I mean, you can arguably say that this kind of smaller jump here was potentially that smaller time scale of some closeouts in December. But what I personally believe, and many other people are on the page of, is they rolled all of that to buy them another month come January. And that's where we sit right now. That next date is January 21st, 2022. As we know, large amounts of open interest across the board for that January 21, 2022 expiration. We've been talking about that for a while. Now, a lot of people were thinking it was going to be a gamma squeeze. I don't know about that because, honestly, things haven't been great. We have been in this overall downtrend for feels like forever. I mean, literally since we were here, 11/16 at $44. Past 2.5 months, yeah, we've been down. Now, what causes that gamma squeeze? Well, we need price to increase, simple as that, and we need to put pressure on that Greek figure called gamma. That's the way it happens, guys. I mean, I can create another video on what a gamma squeeze is and how you kind of track that, follow it, and how it actually happens, because there's a lot to it. But nonetheless, we'll focus on this right now. But I am personally not so hopeful, I guess you could say, of a gamma squeeze occurring on that January 21st timeline. But what I do think is it will be potentially the start of a move to come. Now, like I said, guys, we're in that $20 range right now. So we need to see that price starting to increase before we can actually talk about that run up. But this is hopeful. It's not guaranteed, but it is hopeful. And the only reason it's hopeful is because it's based on previous examples back in January and back in June. So we'll see. We'll see what happens. We'll keep an eye on it. Nonetheless, guys, hedgies, what you doing? You're bleeding. You're not making smart plays with people's money. Come on now. Anyways, what do we got here? Well, Citigroup, and this was posted by Bloomberg. Yeah, of course, we can't trust all the news sources. That's why we got to do our research. But nonetheless, guys, Citigroup, one of the short sellers of AMC and GameStop, as we know, has started to sell off some of their overseas assets. Interesting. Why are you doing that? Consumer banks in Asia and Mexico specifically. Apes, the chain reaction caused by our patient has started. Well, hate to break it to you, bud, but this has been a shit brewing for years. Honestly, years at this point. Of course, we know there's a lot of things going down with Evergrande overseas in China, real estate property development teams. You suck. You went way too over leveraged here. That shit is a storm waiting to collapse. We've talked about other hedge funds. What are they doing? Well, we know what they're doing. They're winding down their offices because they're not making shit for money right now. Kenny G, first time ever in history of Citadel Securities, taking outside investment. So now he is not the 100% shareholder of Citadel. I don't know, man. Some fishy stuff going on in the seas. So, $3.6 billion deal, selling off assets. You sell off assets not because you just decide to sell one day. Typically, you do it because you need some money. But why'd you need that money? Maybe, and just maybe, guys, speculation here, but maybe it's because these shorts are literally underwater with AMC and GameStop. Who freaking knows? So, guys, all in all, it was a freaking week. It absolutely was. I mean, for what felt like days, we didn't move, and then yesterday had that drop to the teens. Today had that drop to the teens. It sucks, but I'm going to tell you this, and we can kind of end on this note. Nothing is going to be easy in life. We're not going to become millionaires, as a lot of us expect from this play, by just getting in a play and overnight going to $10,000. I hope you don't think that, but that is literally not going to happen. This is going to be a freaking battle, a freaking warfare every single day until that happens. It's going to be ugly. It's absolutely going to get more uglier before it gets better. But this is where the true diamond hands and the true apes really are defined and made. Tough times make tough people, guys. Weak times create weak people. That's how it is. Now, last question. Are you in or are you out? That's all it comes down to. All right, everyone. On a good note, I hope you all have a fantastic freaking weekend. I'll be uploading some more videos this week, kind of throughout the weekend, just on some DD that I dig up and some TA. Also starting to focus on more of educational-based videos as well that you can expect to see this weekend, the start of that at least. We're going to start off with a freaking basics and move our way up. Hopefully we all can learn from all of this. So, take care, guys. I love you all. Peace out.